Hello and welcome to Startup Street. I'm Arundhati Ramlin and with me as always, Shruti Mishra. These are the top headlines of the startup world. Supreme Court stays Karnataka High Court's order that quashed the 21,000 crore rupee GST show cause notice against GamesKraft. Government's GST enforcement agency had claimed that GamesKraft offered betting and gambling services worth 77,000 crore rupees between 2017 and June 2022. The agency sent them a notice seeking 21,000 crore rupees in taxes.
Reliance Retail Ventures has signed a joint venture agreement to acquire a 51% stake in Edamama, a kid and maternity wear brand founded by actor Alia Bhatt. The partnership will see the brand grow into new categories such as personal care and baby furniture, children's storybooks and an animated series.
Oyo's India CEO Ankit Gupta and Europe head Mandar Vaidya have exited the firm. In a statement to CNBC-TV18, a company spokesperson said that executives departed 6 months ago. Sources close to the company said that Gupta and Vaidya are both working on their entrepreneurial gigs, and Gupta is likely to float his ventures soon.
Atomic Work, a B2B SaaS startup, has raised $11 million in its seed funding round led by Matrix Partners and Bloom Ventures. The startup plans to utilize the funding towards product development, engineering and marketing activities in the coming months.
The biggest global tech IPO in 2 years is around the corner. SoftBank Group's ARM Holdings plans a $4.8 billion NASDAQ listing. This will value the chip designer at close to $55 billion. That's lower than the $64 billion valuation it commanded last month.
SpaceX might be one of the many investors who funded Elon Musk's Twitter acquisition. Musk borrowed $1 billion from SpaceX in the same month he acquired Twitter for $44 billion.
Those were the headlines that we're tracking for you this evening. Now, the Supreme Court has stayed the Karnataka High Court's order that quashed the 21,000 crore rupee GST show cause notice against GamesKraft. Now, the government's GST enforcement agency had earlier claimed that GamesKraft offered betting and gambling services worth 77,000 crore rupees between 2017 and June of 2022. Ashmit Kumar is here with more details on that. Ashmit, take us through the order and what it had to say.
Right, so setback coming in for online gaming company GamesKraft. The Karnataka High Court order, which was in their favor in the dispute with the GST authorities, has now been stayed by the Apex Court. Keep in mind that GamesKraft is in receipt of a GST show cause notice seeking a payout of 21,000 crore rupees. The GST authorities are arguing that, look, you took as much as 77,000 crore rupees of bet money between 2017 and 2022, and that you're liable to pay 28% GST, and that adds up to 21,000 crore rupees. Now, importantly, the centre challenged this Karnataka High Court order, which had quashed their notice before the top court, and here they've argued that, look, this matter has been contested across very many high courts, that as many as 35 show cause notices are in the works. But importantly, they argued that there are existing Supreme Court rulings that have held in their favor, in the centre's favor, and therefore the Karnataka High Court order is not sustainable, cannot be permitted to proceed. So on that count, the prayer that they had sought was for a stay of the Karnataka High Court order. Importantly, the Supreme Court has, number one, allowed that stay. Number two, has observed that there is enough merit in this case that warrants further consideration by the top court. And importantly, the Chief Justice of India himself observed that he does not want for this particular ruling by the Karnataka High Court to become precedent for other high courts, and that is an important consideration. Importantly, the Supreme Court, as of right now, has not granted any restraint on the GST authorities from initiating recovery proceedings. So that, for the GamesKraft, will remain a question mark. But for now, notice has been issued. The company has to come back and file its reply within 3 weeks' time, and that's when we'll see further arguments and adjudication in this case.
All right, thanks for that, Ashmit. Now, GamesKraft has responded to the Supreme Court's order. The company said, and I quote, "We have noted the interim order of the Apex Court. We, along with the skilled gaming industry associations, will put forth our submissions before the Supreme Court in the coming weeks. We have full faith in the judiciary and are confident that the Honorable Supreme Court will reaffirm the settled law of over 5 decades once again and vindicate our and the industry's position." End of quote.
Well, it's day 2 of the 4th edition of the Global Fintech Fest. Over 800 speakers and 50,000 delegates gathered in Mumbai in the hopes of facilitating around $15 to $20 million worth of funding for fintechs. Now, startups who are vetted by GFF are making pitches to investors present at the summit. My colleague Ritu Singh is at the event and caught up with Rajan Anandan, the managing director of Peak 15 Partners, and began by asking him about what life has been like since they renamed the company and became Peak 15. And here's a slice of that conversation.
The last 3 months have been very active. I must say, I think...
More than usual?
No, I wouldn't say more than usual. We've continued to be active, right? I mean, I think the seed market has been active now for the last... There really hasn't been much of a slowdown in the seed market. The Series A market has been also quite active, and the growth market is beginning to pick up. So I can't tell you specific numbers. I think there's been some media articles written. I can't tell you whether those are correct or not. But what I can tell you is Peak 15 is open for business, and we've been very active over the last couple of months.
But you have, what, 6.7 billion invested in India to date?
We have over 9 billion of assets under management. We've invested over 5 billion, and we have about little over 20,000 crores of dry powder. So, we're quite excited about what's to come.
So where's this 20,000 crores of dry powder going? Are there specific sectors, specific themes that look more exciting than the others? Are there ones that you wouldn't touch with a barge pole?
So look, we invest in the most inspiring founders who are building companies that are going to change India or have an impact on the world. Okay?
Don't all VCs.
That's what we have to do as venture capitalists. Yeah. In terms of Peak 15, look, our number one big focus is AI. Yeah. We already have over 20 AI companies that we've invested in over the last 2 or 3 years. We were investing in AI before AI became the zeitgeist of the world, right? So we actually have quite a number of AI companies. So that's one big theme. I'd say the second theme really for us is consumer. We've seen a resurgence of consumer. We've been very active investors in consumer brands like Mama Earth, Minimalist, Nat Habit, and many others. We're continuing to see now sort of constant innovation of consumer brands across many different sectors. The second big resurgence is gaming. We've made several gaming investments, some which have been announced over the last year or so. And third, look, travel is back. We've made several travel investments in our next surge cohort. You'll see a travel company. We've actually invested in several travel companies. We've also seen sort of the next generation of e-commerce companies, right? So in our last cohort of surge, we had 2 vertical e-commerce. So second big theme is what I call the resurgence of consumer, right? And the third, really, the new area for us is deep tech. Right, so think of it as IP-based hardware, software, manufacturing companies. In our last quarter surge, we had a company called Metastable. We also made our first space tech investment company called Digantara, and so on. And then lastly, we are here at the Global Fintech Festival. We've been probably the most active in fintech over the last 5 or 6 years, and we think that the new generation of fintech companies are going to be extraordinarily interesting and even more interesting than the ones that have come before. So,
well, you practically counted all sectors. I mean, from consumer to AI to deep tech to fintech, even gaming. Actually, gaming reminds me. What do you make of the recent regulatory changes with respect to gaming, for one, which has had a huge impact on some of the startups in the space, or even angel tax being brought back? Lots happened in the last year or so. How do you as an investor view these changes that are taking shape in India?
Look, a 28% GST is very difficult, right, for a gaming company. But look, it is what it is, and I think when you're an entrepreneur, what you learn to do, and when you're an investor, what you learn to do is you learn to adapt. You learn to roll with the punches. What we actually think is the 28% GST combined with the fact that MeitY now has, taken quote-unquote ownership of gaming. We didn't really have a quote-unquote ministry that took sort of, the lead, if you will, in gaming. These things actually makes gaming very interesting.
What's coming next? Let's talk about exits, for instance. How does the year look? I mean, the capital markets have had a bit of a slow run. Are you expecting it to open up? What does the calendar look like for you?
So look, I mean, I think we'll see whether the capital markets open up or not. But if you look at the SME exchange, India's had over 90 SME IPOs. None of them have been, Peak 15 portfolio companies. But we have several of our companies, as you know, that have filed to go public. So over the next 2 or 3 months, we'll have a better sense of, are we going to see those IPOs that are sort of the billion-dollar market cap type companies come out. But we actually think, look, I mean, the Indian capital markets are very robust. We've also seen the US capital markets come back. And at this point, look, it looks optimistic, but at the end of the day, you only know once that bell rings and the company goes public, and then I can tell you where we're at. But look, we are extremely bullish about both the investing environment today. I've said this publicly before. This is the best time to invest. It's the best time to build companies. And I think we're also embarking on an era where it's going to be actually a very good time to take companies public. But that will play out over the next couple of months.
I just want to come back to the 20,000 crores of dry powder you said you had before we wrap up. Because, what are you looking for? There are specific themes you spoke about that you're excited about, AI being one of them. But what would you look for at a company level, at a founder level, when you deploy this next bunch of capital?
Yeah, so look, we invest from seed through growth and pre-IPO and even post-IPO, right? So what we look for varies significantly depending on the stage. At seed stage, we have this, our platform is called Surge. 50% of the companies that we invest in are pre-launch. They have not written a single line of code, half the companies. So what we're really looking for is extraordinary founders. So we spend a lot of time trying to learn about the founders, getting to know them. Do they have domain expertise? Do they have very deep insight about the problems they want to solve, etc.? And we also look to make sure that the market that they're going after is very large. So that's at seed stage. At Series A, what we're really looking for is great founders. Those things stay the same. We also want large markets, but we're looking for product market fit, right? So you've launched your product, you've got great customer love. And at growth stage, we want the mathematics to work. What that means is your unit economics have to be very strong. I think the days of growth stage companies that are deeply unprofitable, raising capital, I think are over. So today, I think you've got to have very strong unit economics. By the way, it's perfectly fine to be not profitable, but your unit economics have to be very strong at growth stage, and you have to have a path to profitability. So what we look for varies by stage. They just keep adding. So it's great team, great market, plus PMF, product market fit at Series A, and then you add great unit economics and a path to profitability at growth stage. So that's roughly what we look for.
Well, there's more coming in from our coverage from the Global Fintech Fest. Boston Consulting Group and Matrix Partners India today unveiled their annual fintech report, The State of the Fintech Union 2023, at the ongoing Global Fintech Festival in Mumbai. I earlier caught up with Ernest Sojana, Managing Director and Senior Partner BCG, and Vikram Vaidyanathan, the Managing Director at Matrix Partners. And I began by asking Vikram about the fintech ecosystem entering the 1 to 10 phase or the middle journey. Take a look.
0 to 1 journey is, do users need you? And do you have PMF? And that, as a fintech ecosystem, I think we have. It's clear with 50,000 people here at the GFF conference in Mumbai that there is PMF and there is an industry that's gotten created. The 1 to 10 journey is the ecosystem asking the right tough questions on whether this will last forever. And is this scalable? Is this sustainable? And those are the answers as an ecosystem that the startups have to come up with. Said profitability, that is probably the #1 focus in the report. And I would say there's a survey that the fintechs answered, and 50 to 60% of people across categories believe that they will be profitable in the near term. They were postponing revenue monetization from existing scale. They are no longer doing that, and they're extracting revenue much sooner than they expected or wanted to in that journey. On costs, they are marketing less and CACs are lower, but that's the only thing that's really changed on costs, because otherwise the fintechs were reasonably efficient. They were not making revenue fast enough.
All right, let's get the global perspective here. Vikram explained the 0 to 1 and the 1 to 10 journey for the Indian fintech ecosystem. What are you seeing globally, and especially in the Asia-Pacific region? What new trends are you seeing?
Yeah, I think we're seeing a similar trend actually. And the fact is, this region remains very, very attractive. And most of the fintech investments are still coming to Asia-Pacific. I think very soon, I think we will be one of the largest region, right, in terms of overall investment into this space. I think to Vikram's point, rethinking business model, rethinking monetization potential is super critical across the region. And we are actually seeing some innovation coming up, right, of fintech actually partnering traditional players, to build a business model that will sustain them into the future. And I think those are some great examples to learn from.
All right. Vikram, coming back to you, another interesting trend that I saw in the report was that newer companies are achieving milestones quicker and faster. Why do you think that's happening, and what's interesting there?
So net is the market has arrived. Before fintech was a push product where you had to go and tell people, please use, why don't you take cash back, and then they would use. Today, fintech across segments is a pull product. So wealth tech, for example, we've never made investment before. We've just invested in 2 wealth tech products because even in wealth, users are coming on their own online and then are searching for a digital wealth product, which means it's a pull product, which means that more users adopt you in the first year than ever before. That means you get to user milestones much faster. And the next part of it is that India is the fastest growing large economy, and in this process, the incremental GDP that is coming online and getting digitized much faster. And therefore, it also leads to faster revenue pools for them.
Now, we are seeing fintechs move up the valuation pyramid, Ernest. But do you also see a shift in, the shift being towards lending tech from pay tech, which was earlier the case?
Yeah, I think if you look at where the investments are coming in, I think payments and lending are still the 2 largest pool. But I think having said that, I think if you deaggregate the Asia picture, a lot of growth also starts coming into the new areas such as wealth tech, and even insurtech is now start to come into play, right? Including the ancillary services like credit scoring tech and so on, right? That are supportive towards the lending technology. So I think you should expect the investment stream to be broader in the future because the customer needs is really there, right? I think another area that I'm seeing a lot of traction is actually around the MSME space. I think in the past, people were very focused into, kind of the consumer financial services play. But I think Vikram would be familiar with this, right? Supply chain platform, SME lending platform, banking as a service platform are the key areas that you should see growth going forward.
So I want to talk to you about the regulation headwinds. It's a highly regulated sector. So what can really be done to kind of enable innovation and also contain systemic risk? What more needs to be done?
So one, I would say regulation is a feature, not a bug in financial services and fintech. It is a necessary condition for this ecosystem to thrive. You can't actually deal with people's money and expect that not to be regulated. So I would start with that. Second, RBI is a very progressive regulator, right? It has a fintech department today. We spoke to actually today the CGM and so on. It is one of the most progressive regulators. Otherwise, we wouldn't be here. My first advice is go embrace regulation. So I would rather that you spend those first 3 months dealing with the regulatory headwinds rather than you having taken some missteps and be caught with your hand in the cookie jar and then have to go sideways in year 3. That would be my advice.
All right, one final question before we let you go. Vikram, fintech IPOs, do you see a lot of companies hitting the markets anytime soon?
If you ask me this question 12 months back, I would have a very vague answer. Today, I have a very definitive answer on the medium term where I can see multiple companies getting prepared for these IPOs.
Okay.
Some of it is also because now you have large, profitable companies, right? Zerodha is a big example. In our own portfolio, 5-Star has already gone public last year. Oxizo is highly profitable. We have visibility on companies like OneCard, Razorpay. And the question is, are these being run already like public companies? And do they have the compliance and governance framework in order to withstand the trials of being public? Right? There, it's going to be different, I would say, timelines for different people. Some people are ready in 6 months, some people are ready in 12 months, some people will be ready in 18 months. But you wouldn't even get that answer from me before.
So 2-3 of your portfolios are definitely hitting the markets next year?
They're rumored to be going public.
Next year? Rumored to be going public next year. All right, okay. On that note, we'll have to wrap up our conversation. Many thanks, Vikram and Ernest, for joining us on Startup Street today.
Thank you for having us.
Thanks for having us.
Shruti, I mean, one common theme seems to be that everyone's bullish on Indian startups, especially fintechs, and we're going to see some IPOs, it seems.
Yes, absolutely. Even Rajan Anandan mentioned, and then Vikram from Matrix and Ernest from BCG, all 3 of them mentioned that it's a very positive environment, and we will be seeing a lot of fintech IPOs in the next 6 to 8 months. So we'll surely be tracking that.
Absolutely. So lots of positive news there for the startup ecosystem. But on that note, it is time for us to head into a short break. But coming up, we continue with our coverage of GFF. Ritu Singh speaks to the members of the advisory board at the Global Fintech Fest about the 2-day experience of the festival.
Welcome back to Startup Street. The who's who of banking and finance have converged at the 3-day-long Global Fintech Fest to discuss the steps to build a responsible financial ecosystem. Ritu Singh caught up with Srinivas Jain and Naveen Surya, the men responsible for running the show at the summit, and asked them about the key highlights and the response so far. Take a look.
It's phenomenal. The response has been fantastic. We've never seen over 100+ country visitors, people from all over India participating. This has been one hell of a session. And I know we had a little bit of a trouble because of the crowd, but we managed it. And
but what stood out for you?
The expo. I think beyond all the powerful speakers, I think the expo continues to be wow, right? It's full. You can kind of see the action that's happening in the expo. It's phenomenal. The kind of footfalls that are going, innovation that's coming up. It's a whole lot of interesting stuff is being showcased today. And of course, you had the who's who in the financial services industry come and talk about whether it was finance minister or the regulators.
Yeah.
It's a fantastic
Well,
session.
a lot's been said there. We'd like to cover some of it. But Naveen, let me come to you then. The theme really has been global collaboration. And in the sense that Asia, or Asia Pacific more specifically, is emerging as the hub of fintech innovation.
Yeah.
What are the challenges and opportunities that are emerging for the sector? Your thoughts quickly.
Yeah, sure. So I would say it's not just Asia or Asia Pacific. I would
India?
say India specifically.
Yeah.
And I would say for the entire world. I think the products and the services that have been built in the last 10 to 15 years, the whole digital infrastructure that has been built in India is completely unprecedented. There's no other parallel example in last decade and a half which can match to this kind of a scale, this kind of expectation. And it continuously is evolving. And like I said, somebody told us that your event is also becoming like a fintech company. Last year you were like the whole 3 days, 30,000 plus, and here it looks like that you'll surpass at like 2 to 3x again in this year. So it shows the ecosystem is so vibrant. The opportunities are in all areas. Again, India being in a country where the penetration in financial services, even banking and payments, just about, let's say 2 digits, but only 2 digits. You talk about everything else, right from lending to investments, right? And every new area is just less than single digit, 2 to 3%. So that shows huge opportunity and the scale up. And the kind of talent we have, the technology exposure we have. You talk about fast payments, we are the leaders. You talk about digital IDs, we are the leaders. You talk about data aggregation platforms, we are the leaders. The number of things that are coming up. You talk about CBDC. We started a bit late. The pilots are already out.
Well, one of the big things that at least some of the fintechs were looking forward to is the 250 applications you vetted for funding. It's been a tough environment, of course, but there are more than 300 investors at the Global Fintech Fest. What has materialized so far on this front?
Early days, but it's actually supposed to start today. We saw a lot of networking events yesterday, people doing those early pitches. We expect by end of today some sign-ups, and hopefully by tomorrow evening we'll have some numbers to share.
Okay.
But I think it's exciting. This is the first time when we have such large participation by investors.
But you're expecting $15 to $20 million as you last told us?
I think that I think we should be able to do. And I think beyond that, this event is a catalyst for those conversations to go forward. And I'm assuming more multi-million-dollar contracts will get signed. Our investors will
we'll wait to hear the final numbers.
So just to add to what Srinivas said, there's one segment of startup alone, which we are saying that about 10 to 15 companies may raise about 10 to 15 million funds. So this is one segment.
Yeah.
Then there are a host of about 30 to 40 companies meeting about 50-odd growth stage investors, each talking potential, because those deals don't happen overnight, right? At the start of a relationship and a dialogue, each one of them talking 10 to 15 million each. So you're talking about a couple of billions right there. And then you're talking about early stage IPO companies, because there are a host of fintech companies readying for IPO. So they are talking to large funds, figuring out that where they are and how much they will generate. And those, again, you're talking about at least $5 to $10 billion kind of
And that's
raise.
the conversations that CLSA is facilitating?
Exactly. And even the listed companies who are meeting global investors, funds who are coming in. So if you look at from an influence perspective of the investment decisions, which have started yesterday, will continue till tomorrow evening. And those conversations may culminate the influencing part of easily about $5 to $10 billion.
So that's all the action from the Global Fintech Fest. But with that, it is a wrap on this edition of Startup Street. From Shruti and me, goodbye and many thanks for watching.